Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, November 15th. It is 6:40 as I'm starting the video. And as always, remember to run your player at 1.25 or even 1.5x to work through the material as quickly as possible this morning. Make good use of your time. You're always welcome to slow it down or stop when something important in your mind comes up. So, taking a quick look at futures, we're green this morning, up a little bit. Oil's down 1.25%. Keep an eye on gold. A lot of us are in the long gold trade. The next level of resistance on my chart is 1870. On the gold futures chart, GC. So that breaking above that would open up the door to the next leg higher. So really consolidating here under that level. Bitcoin's up strong, 3%. Not a real close Bitcoin follower, but I understand that there was a major software upgrade to the Bitcoin blockchain that'll make it a little bit, I guess significantly faster and more efficient. So that is apparently a catalyst this morning. So keep an eye on that. I think the biggest thing on the macro front is the Biden-Xi virtual summit that's due to happen sometime today. Now, I thought that was going to happen during the day, but I've heard a couple reports that it might be kicking off after the markets close. But be that as it may, what I hypothesize in the blog this morning is that may be a hidden catalyst. We know that the China-U.S. relations have been pretty icy here the last few years and maybe at their low point for the cycle. But anyways, so based upon that, there's absolutely no positive expectations for this virtual summit. And what I was saying in the blog is that, should something positive come out, anything at all, I think that would be viewed by the market as a positive catalyst, something, new, unexpected, positive coming out of that thing that might lift markets in general, but maybe specifically the China tech names, the Baba, JD, Baidu, KWeb complex. We know that those have been beaten down over the last year and a half with their crackdown. But I think those names, if you go look at the charts, they're not going down anymore. They've been basing. So if there were to be a positive outcome from this meeting, you may see a lift in those names and get them on an upward trajectory. I think at the very least, if you're interested in those names, go through, set yourself an overhead alarm, right above the basing level. And they may base for 3 or 4 more months. But whenever, you'll forget about them. Have yourself an alarm at a place where you want to re-engage those stocks. Set yourself an alarm, and whenever it goes off, then you can refocus on those names. I think they'll all go off together, actually. That's usually how it works. Whether that's KWeb, the basket, or if you're interested in individual names, go through your list, set yourself an alarm, several alarms, and then when those go off, you'll know that something is changing on the charts and you can establish a position or decide what you want to do. Over on the earnings front, didn't see a whole lot today. We've got Tyson Chicken before the bell. I didn't see a whole lot after that. But then tomorrow morning, before the bell, we've got Walmart and Home Depot. So if you're an earnings player, you may want to watch that order flow or price action ahead of the earnings release in the morning. And then if you wanted to take a position or do whatever you want to do, I'm going to show you a chart on Home Depot in the deck this morning just to show you where it's at. But anyways, that's what I saw for tomorrow morning. Okay, let's get into the charts. The U.S. dollar continues to be really strong. We're going to need to watch that, generally regarded as a headwind for commodities. But as we've seen, commodities have not really flinched. Copper had a good week last week, as well as a number of other commodities. Oil is kind of in a consolidation phase. Might actually on the blog this morning, there was a nice graphic that I included that kind of showed why, or some of the reasons why oil's been kind of soggy here the last week. But I think oil is ultimately going higher, and I think whether you're tactically trading that within an uptrend or just camped out in a longer-term position, I think being long oil is going to work out. Taking a look at yields, back up here to the near-term high here at 1.58%. I think last week the market kind of dodged that bullet with the CPI at over 6%, highest in 30 years. Took a wobble, but ultimately I was very pleased with what I saw on Friday. Remember, we talk about, what does trading look like going into the weekend? We had a very strong final couple of hours from 2 to 4 on Friday, and that told me that risk sentiment going into the weekend was good. People were willing to hold on and even add to their positions heading into the weekend. So I thought that was a very positive note, and we'll see that FATMAAN had a very nice week last week, very strong Friday. And so, from that standpoint, looked good. And of course, if you're any kind of a bond trader, we've gone from the bottom of the range to the top of the range, now back down to the bottom. If you're interested in a bond trade, I think you should have the bottom of this range alarmed, whether that's 146.50, or if you want to alarm the 200 right below it at 146. I think if you get a break below that 200, I think there's a real good chance for a quick move down to test these prior lows at or around 141. And I can only imagine that inflation expectations are going to remain pretty hot. So if the bond market finally responds to those type of numbers, I think rates should continue to move back higher again. With the good positive moves after that inflation print, they've slammed the VIX. We reached up and almost got 20, but now we're down, pushing 16. So we had that little week-long spike where we saw the weakness in the equity markets. Now we are back down again, well towards the bottom end of the range. And of course, our oscillators are in the middle of the range, so they're not really predictive from that standpoint. Moving on to the indexes, we've got SPY 2 hour. We had this little corrective move for, a week or so. We based here at 464, and we said that was a level that needed to more or less hold, or else the door would be open to lower prices. And we got a very impulsive, I call this an igniting bar on Friday morning, and then it consolidated the rest of the day. But when you see an outsized bar on a particular day, Just looking at the magnitude of the bar, we've got, tiny bars coming down. Here was a sizable red bar, but then they bought it up with that little hammer bar that we talked about, did some more consolidation here at 464. And really, from a technical standpoint, your thought process should be is that, after this big red bar, big sell bar, and then follow-up bar that they bought up, and then consolidation, in your mind you should be thinking bears are out of power. That the selling was abated, and now with that consolidation, you don't know for sure, but what you could do is, if you wanted to lean to the bullish side, you can take your long position with a stop down below all these tests at 464, and then of course then you get your big igniting bar. If you're more of a wait and see kind of a trader, okay, you got this igniting bar. That's a big positive, especially on a Friday after a period of weakness. That's a very good sign. And so now today, we've built this little flag formation. You can see it here on the 30-minute chart. Anything above 466.50, and really we're right here at 467, we'll open higher than that. But now we've got a flag structure that points higher, and then your next level of breakout would be at this 468.50 level. So if there was any kind of weakness this morning, if we open higher and then they make a quick move to come back and fill that opening gap, I think that's a very good place to try and get long on SPY. And notice on the indicators, we've broken back above the zero line on momentum and on RSI, so that's supportive of a move higher. We saw very much the same thing on the Qs. Sell bar down, reach down candle to the bottom of the channel. We said, although it didn't quite make it in terms of the way I had the bottom of the channel drawn, I said, making an executive decision that I think that was going to be it, that served close enough for government work as a touch. And then the next day we got a gap up, and then they kind of came back and filled that gap. But there was no more power left in the bears to push it down below 390. And then you got that big igniting bar Friday morning, and then a consolidation right above 394. So I think that's going to be a really good line to shoot against on the long side. Anything north of 394, in my mind, is going to be bullish, where you can stay long. And one thing nice about the indicators here, remember kind of what we always say, a momentum reset that brings momentum from a high level down to the zero line, where it curls up and makes that bull cross at zero, is a very bullish setup. And you can see here on RSI also, we dipped down below 50, but now we've broken back above. So any kind of a green day today, we're going to have this bull cross will execute at the zero line, and that's going to be have it positioned for another up cycle. So I viewed that as a really good sign. And you can see here on the smaller time frames, they've already broken above their midpoint here above 50 and here above 0. So that's bullish. And here we see that flag structure above 394. So just stay long against 394 with a stop below. And if for any reason, let's say they just gap it higher this morning, they never come back to fill that little gap. If you get a break above 396, then I think that's buyable. Why? Recapturing a key level from below is normally a buy signal. And here we will have recaptured the midpoint of the 30-minute channel. We will have gotten above this large volume over price resistance bar. And then we'll have much easier trading above 396, and then the door will be open for a move up towards 398, 399, where the next level of resistance will come in. I didn't want to look at that. IWM 2-hour. Soggy day on Friday, didn't really do anything. We've got price trapped below 240. I think that's your easy pivot for today. Notice that the momentum has come down, but not yet really started to curl and go higher. I think you get a break above 240, you can be long there. I still like small caps, but price has got to prove it, and I think there's not a real reason to get long unless you are already on a longer outlook, longer term horizon, that a break above 240 will open the door for shorter term traders to get long and then look for a move up towards 241.50 and then higher after that, breaking back into the channel. And remember, from way back when, we've got a measured move target right around 255 from the breakout of the daily time frame. That big year-long consolidation points to a move up in the mid 250s. And then here you can see on the 30-minute chart, we had an old gap that got filled. We undercut it. We came back up. But look how price has respected that the old gap levels, just right up here to 240 and right down here to 239, trapped in a very tight range. So here, as I just talked about, a break above 240 will open the door. You've got a layer right here at 241 that I think if it were to break through 240, I think it's going to break through 241 as well. And here you've got the long or large volume over price bar that shows that resistance level right here in the 239, 240 area. Some really dynamic moves in the FATMAAN names. Before I get into it, I want to welcome any new visitors to the channel. I really appreciate your time this morning. I hope you get a lot of value out of the levels that I point out. I think if you learn to trust my levels and then build your execution and trading skills around those levels, I think good things will happen. So welcome. Please hit the subscribe button and the alarm bell and the like button. Those will help others know that you see value in the channel. And then jump over in the show notes. There's a place where you can, there's a link to the blog site where you can drop in your email address and then register for all my content. And then anytime, during the day, after hours, when I send something out, it'll come right to your email box. I really appreciate that. Okay, FATMAAN, Facebook, very dynamic move. Friday, up 4%, had a gap and go with 3 powerful candles right out of the gate, going up here towards this 342 resistance level and then backing off and then backfilling and relaxing building a flag right here. I think any pullback you got to this 338 area at the bottom of this flag would be a great place to try a long. Otherwise, anything above Friday's high at 341.86, I mean, you could call it 342, would be, fine. And a break above 342 will open the door to 346. And then above that, then a lot easier sailing. So really out of nowhere. But if you had, I didn't have it in here, but your trend line, and then you got that gap above. Whenever you have a gap above a resistance level, whether that be a trend line or a horizontal resistance level, that's usually a very a bullish sign where it just doesn't even want to deal with that. It just jumps right over it, and then you've got you've certainly got a level to shoot against long. You don't know any of this is going to happen, but you've got that gap to shoot against on the open if you're on top of it and it doesn't get too far away from you. You can always be long against the top of the gap, and that really goes for any kind of time frame. Apple had a decent day as well. A lot easier trade to get into because there was no gap. The first candle of the day opened up here at somewhere around 148 and took a dip below, but then recaptured it, which is always a buy, and then had a nice day and put in a flag. We have this open gap from before, so I think anything above 150 you can be long for this gap fill, and maybe an eventual move up to 150, and then potentially up to 152.50. But of all the, aside from Tesla, but compared to the other FATMAAN names, Apple has not been quite as dynamic. You can see that it's been in this, consolidation range. I mean, between 148 and 152. I mean, we're talking about $3, so a little harder to make a bunch of money there. But if you want to play for, $1.50, it's certainly there for you. Tesla has been in this consolidation range between 1020 and 1080. So between those levels, I mean, they are crystal clear. You can be long against 1020, and then you've got 1080 as an upper resistance level. You get a breakout above 1080, and then that opens the door up for a $90, $100 move back up through here. Now, this right here, I mean, that's a sinister candle, right? Because you had this well-defined range. You got the breakout above 1080. Everybody piles in long, and then they reverse it. I mean, there's just nothing you can do there. I mean, from a technical standpoint, from a trading standpoint, except, say a few cuss words and get the F out of your position, because once you leave that range, especially on that fast reversal, where's your target? The bottom of the range, and that's exactly what you got. So that's a perfect example where, okay, you got long. I would have gotten long. Anybody would have gotten long that's a technical trader. But at this point where it came back into the range, you can do one of two things. Be thoroughly disgusted that the market did that to you and gave you a loss, or you can be disgusted that you got the loss, but quickly move into what's the next opportunity. And sticking with the principles, the next opportunity is fake breakout, target bottom of the range, and then you had your nice winning trade. And then on Friday, once you got to the bottom of the range, you cover your short and time to go long with a stop just below 1020. So that's the essence of active trading. If you're more of a long-term trader, then you buy at support and you say, okay, I'm going to stay long unless I get stopped out. And hopefully you get that breakout here at 1080 and give yourself an opportunity to get in at a good price and go higher. Microsoft wasn't quite as dynamic as the others, but still had a nice day. Again, at support, you're supposed to buy at support and sell at resistance. So here we go. At support at 332, bears had lost power on this fake breakdown and recapture. So now flagging just below resistance at 337.50. Remember, we've got a $5.50 range, right? From 332 to 337.50. You get that breakout, you get long with a target 550 higher, and that sends you up to 443. So that will be your target on a breakout of this rather long consolidation, $5.50 consolidation range. Amazon, hammer candle, nice opportunity to get long if you're on top of it. You had an undercut of 34.60, which was then recaptured on the way back up. If you got it there, you're a sharpshooter, great job. You got follow through, great job. Flagging here at 35.20. If you had missed this move, you could have gotten long here on the recapture of 34.95, and that still would have been a nice trade on a Friday afternoon. Now right here, I think you can use 35.20 as a pivot point, and then you've got resistance right here at the old gap where you break back above there, then you're going back to 3,600. Notice the posture of the PPO. High level comes down to the zero line, starts to curl back up. Same thing with RSI, has broken back above 50. Google, again, another nice opportunity if you were on top of it. Initial weakness, recapture of 29.25 was your buy point, and then you got a really nice move on a Friday afternoon where, there were just tons of, that was the Lotto Friday that we all, hope and dream about, where you get a chance to get in on a name that ends up having an outsized move on a Friday. A chance to buy. Options are going to be as cheap as they're going to be on the, on Friday, but then you get the big move. And so there was a lot of guys that got really, really nice paydays if they were, in a Facebook, even a Microsoft or Google. Any of those names paid off really, really well. So today, I think you can be long against 29.65. Netflix up $25 and actually had a low of 653. So here was your opening candle down, and then your recapture of 660 was your technical buy. And then look at that, way up there. $25 move on a Friday is big, big money. Right here at 682, I don't think you can do a whole lot other than, if you wanted to try and sharpshoot the open, you've got to set a relatively tight stop. That's not my trade because there's not really anything technical to shoot against. If you got any kind of pullback in the 675, that would be great. Otherwise, you're going to have overhead resistance at 690. So anything above 690, you're going to be back in blue sky, and I think you can take that long. Semiconductors, nice day. Made a move higher, then flagged out. I think any kind of pullback into 300 is a buy. Any breakout above 302.50, 302.60 is going to be a buy, sending it back into blue sky territory. We've already met our technical target off of the daily chart, but once you get back into blue sky, no natural sellers, so I think you can be long. Ran across Autodesk here. It's got earnings on November 23rd, and we're testing a $15 gap, or $12.50 gap. I would not be surprised if this makes a little, pre-earnings run into next week and fills this gap. So if you're at all interested in a pre-earnings trade and you get a break above 330, I think you can be long looking for that gap fill and potentially a breakout heading into earnings on November 23rd. I make a point in the blog this morning about coffee. 7-year highs. I've been talking about coffee since way back here on the 10-year breakout. Had a great run. Now right here you can say, damn it, I remember Chris talking about that again and again and again and again and again, and I never got long. What do I always say? Don't get mad. Look for the next opportunity. We're still way off the prior highs of $3. We're down here at $2.20. If you take the view, okay, I could set my stop like around 210. And really, if you're not into coffee futures, you can look at and I've got this on the blog this morning, you may want to take a look at it, the ETN Joe. That's the tradable ETN. You can look at that and get comparable levels. But the door is open to go back to all-time highs, and catching a move from $2 to $3 on coffee wouldn't be all bad, right? And then we'll see what happens if and when it gets up to $3. It may go on and make a new high, and then everybody up here will be saying, "Gosh, I had a chance at $2 to get long, and I never took it because I thought the move was over." Try to avoid that thinking. Yes, there can be some consolidation here. There can even be a pullback, but have your levels marked, and then if you get a move above, you'll be ready to go. With dollar strength, I've got an eye on EEM. We're here at a big downtrend line. I've been surprised that EEM has been going up with the dollar going up. That's usually not the case. I'm watching this here for a potential rejection. But if it breaks out, a breakout is a breakout, could go up here to 53.50. And I mentioned Home Depot that has earnings tomorrow. This thing's been, up and to the right for years. And now we've got this impulsive weekly flag where we've gone from 330 to 365, flagging here. A break above 375 sends this higher. Whether you want to take a position either before earnings or wait till earnings clear, which is my style, you get a break above 375 and then the doors open, and I would imagine that next move would take it on up to our round number of 400. So have that on your radar. it seems like it's still strong. And then let's see, Wednesday we have Lowe's, so that will probably make a move in sympathy if Home Depot has a good report. Let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good start to your trading week, and talk to you next time.